series. In this COVID-19 series, we're looking at the government legislation. We're looking at the practical steps accountants need to take in terms of advising their clients, their customers, their employees, their team members. And we're looking at what accountants need to do for themselves and their own business. In an Irish context, we have had some revised guidance and a revised ministerial announcement in the last 24 hours. So overnight, John, Yvonne, and his technical team have looked at the most recent guidance updates, the most recent announcements, and we want to share those with you today. Now, we're doing a brief share here today because this stuff just landed yesterday afternoon, and we are working towards doing a more detailed 60-minute webinar probably on Friday of this week. So because of the changes, I always want to register in each of these sessions the date. So today is Thursday, the 16th of April. This is the latest information that's available as of today. John, what has happened? What's happened in an Irish context in the last 24 hours in relation to the subsidy scheme, and what is on the horizon for me?
Yeah, so the FAQ version 6 was updated this morning, just this morning there. So they are not. So the minister obviously announced yesterday afternoon or forenoon that there was going to be changes made to the subsidy scheme. They're not effective for periods where there's a pay date on or after the 4th of January and submitted to revenue on or after that date. So I suppose it's down the line at this point in time. The only guidance that
sorry, John, was that a slip of the tongue? It's effective for payrolls from the 4th of May, is it?
Yeah, the 4th of May. So this is the FAQ version 6 that was issued this morning doesn't deal with any of that. It's just clarifying the matters based on the current rules for payroll date before the payment date before the 4th of May, effectively. So that's clarifying that's FAQ 1.6, which we look at here. But also, I suppose we've taken a look at the statement that was issued by the minister and published on the government.ie website. And I suppose we've made an interpretation here, myself and the team here, as to our understanding of what that means practically for a pay date, which for 4th of May 2020 on or after that date, up to the 30th of June or whatever date.
And John, obviously, so we're working off a piece of legislation that was hurriedly drafted. The fact that it's a 6th version of guidance from revenue in less than 10 days tells its own story. Now we have a ministerial announcement with no underlying legislation. And so there's a big interpretation judgment in when we look at the May onwards pay periods. John, is this going to be a supplemental piece of legislation? Is this going to be an extra bill? And how do you think
I foresee it's going to be just revenue guidance, I imagine. It'll be revenue guidance based on the application of the scheme on or after the 4th of January or May, sorry, 4th of May pay date. So I don't imagine they'll change the act. It's just clarifying its relation to the act. So it's just clarification of the way it's applying from that date. So it'll be more revenue guidance. It will be my opinion in relation to it. I suppose then we're looking at
so just one thing before we go any further. Obviously, if you have any questions, whether you're watching this on Facebook, YouTube, wherever you're watching, if you go down to the comments down below, if you have any questions, and if you stick them into the chat box, the team will make them available to John and myself. John, 2 constituent parts to this morning's session. The first one is the update to version 6 of the frequently asked questions. And the second one is the ministerial announcement. Which one do you want to tackle first?
Yeah, I'll take a look at the FAQ version 1.6 here at this point in time, version 6 first. So really the main change then just in the FAQs and what came in there. So FAQ 1.6 has been updated and clarified that the reason why they're not allowed to regrossing in relation to this is because the results can differ so much depending on the fact that people have different tax credits, non-statutory deductions, things like that. So they're emphasizing, well, the reason we're going this way is because we're trying to get some sort of uniformity here, and that's why we're using the net pay here, and we're not using gross, and we're not allowing regrossing because it results in too much of a variation depending on what the person's circumstances are. So it's more clarification. I suppose they've got asked that question again and again, and they're trying to clarify the reason why they went that way. Which in fairness is hard to legislate.
Yeah, the questions that I'm seeing coming in for accountants directly to me, John, are that they're highlighting the anomalies of this system. And so there are anomalies in it, but revenue are looking for people to get to a consistent base level of pay is really what they're doing here.
Yeah, they're wanting to be fair to everyone because they can't deal with everyone's tax credits and everything else. We just have to make a rule, and this is the rule, and this is the best we can do to allow for, you know, some sort of uniformity to a certain extent here. It's not perfect, but you know that's what they accept. But it's the way that the best way they can try and legislate the same type of net pay and fairness in the rules effectively.
Okay, so what else was covered in the guidance, John? Was that one of the main, or was there other bits and pieces?
Oh yeah, no, they got through. So FAQ 1.9 was updated. It just merely changed. So as we know, there's no deductions off the net pay that you're paying now in these months. LPT is not to be deducted, but they're just clarifying the employee can go onto the LPT system itself and have it paid in another way, annual or direct debits in relation to that, or if they have any other query to go to the LPT section to get answers in relation to those. Just then, there was always the worry about FAQ 1.10 is a new FAQ which came in, which is confirming that the subsidy will be considered pension pay for employee pension contribution purposes, effectively because they have said they are taxable, so therefore, comes into account for the pension perspective. The employee can make non-ordinary or special contributions so that they, like at the moment, the revenue said don't deduct any pensions when you're making that pay unless the employee tells you. So they're just clarifying, well, an employee can still make a non-ordinary or a special contribution by the end of the year for 2020, and the subsidy that was paid will be taken into account as being reckonable pay for the purposes of determining the percentage of a pension that you can get tax deductions for. So just clarification, because there was a lot of questions on that. Just another FAQ 1.11 is 1.11 is another new one. It's now confirming that although Section 772 deals with, and this is really dealing with occupation pension schemes where they give you the tax exemption for contributions to that by the employee. That one of the requirements is that the employer must contribute to the scheme. So obviously in these times, the employer might not be contributing to those schemes. So it's just clarifying they're going to, give a concession here that, where there's no payments made during this period, it's not going to result in the scheme not becoming a good scheme effectively from the point of view of revenue. So again, good clarification given, which is important. FAQ 2.2 is also amended. This deals with the employer registering for the scheme. It just confirms for some employers can have multiple employer tax numbers. It can happen. Maybe you could have a director's fees, different tax number for that compared to a normal payroll. And they're just saying if that is the case, once you register for the scheme, you only need to register under one employer tax number. Once they have that employer tax number, they'll automatically have you register for the other employer tax number in relation to it. But they do emphasize again, if you are in that situation, for the two tax numbers, you will still have to update the bank details to allow the refund to go into them.
And John, just to be clear, and I know you've answered this question 100 times, I suppose the frequency with which people are asking the same question over and over 2 weeks into this process, John, demonstrates there's still a huge level of confusion out there and uncertainty. But where somebody has multiple employments, so say, for example, a director is paid out of company A, B, and C, for the entire subsidy, like if they were paid lower levels of wages out of each of them, they have to aggregate their total wages for calculating the average weekly net or not? Is there a loophole there? Is there an anomaly?
No, well, I suppose each employer applies their own employment number. So this includes, this is not the same thing as a same employer having the same two tax numbers, because then they would be aggregated. But if not, they aren't aggregated. But what Revenue said in the previous version of the FAQs was that they will look at people with multiple employments in phase 2, and they will tell you from that date what amount of subsidy you will get for that. But at the moment, yeah, you could get the 2 subsidies. But phase 2 will change that. And they just clarified that, I'm not sure if I said it there at the start, that phase 2 has moved from the 20th of April now to the 4th of May as well. So effectively phase 2 is whereby Revenue are going to tell you, they'd automatically calculate what the subsidy was as part of the system. They've now said that's not going to be done. It's going to be put back to the 4th of May. It's obviously timing from their system's point of view. So they'll continue to pay the €410 for every employee that's put on a J9 still. Up to it was envisaged that would stop by the 20th of April, but again, it's not stopping now because I presume the systems aren't ready to go. It's just, again, the danger here is, and thing to remember and to advise the clients is that this 410 is not your money. If the subsidy for that employee is less than 410, well then you're going to have to refund that to revenue in those cases.
A question in here from Jack, who's joining us from Facebook. Any thoughts on when there will be an outline of how the tax on the subsidy payments will be dealt with at a later stage? It seems to have put the shivers up a lot of people.
Yeah, no, there's nothing out there other than the fact that, look, they're going to look at it at the end of the year, and they're going to more than likely reduce your tax credits over the next year or two, depending on the amounts involved.
So John, just to be clear, the subsidy amount is taxable in the hands of the employee, and the top-up amount, if paid by the employer, is not taxable in the hands of the employer. That cannot be treated as a tax deduction.
Sorry, just say that again, Des.
So the top-up amount, the subsidy amount is taxable in the hands of the employee, and this is where there's going to be a review done at the end of the year, so the tax liability arising. And for employers who pay a top-up, that top-up is not treated as a deduction for corporation tax purposes.
No, that is the revenue from the employer payment is, so the top-up element is tax deductible. The subsidy isn't, obviously.
Okay, so the top-up element is, the subsidy is not.
Which is fairness, because the subsidy is not taxable either. They've also confirmed. The only thing that's doubt now in relation to it is the pandemic payment is on the side as to whether that is taxable. It would be a bit unfair if that wasn't taxable, and the wage subsidy element of, let's say, the 350 is taxable. It just wouldn't seem fair. Well, then you're probably better off going to the pandemic in those cases. So I know revenue to issue guidance in relation to it, but if you think about normal social welfare benefits where you're on, let's say, 3-day week, usually it would be taxed for the first €13 of the money would be tax exempt, and the rest would be taxable in those cases.
Any other updates on the frequently asked questions, John?
Yeah. Just FAQ 2.4 has just been updated, so it appears that where you had rehired staff prior to the week commencing 13th of April 2020, and putting even on J9 in your payroll submissions, revenue weren't paying out the whatever €450 in those particular cases. They've said for those, they will now be paying them out for a week commencing 13th of April, and also for periods before that date. So they paid the refund. So before now, they weren't paying the refund for some reason. They're just saying it will be now. FAQ 3.1 then confirms that if amendment or a deletion is made to the payroll submission after the 15th of March, then the amendments or deletions are not valid at all, and they're ignored, which is obviously not great. And some people are trying to amend, so maybe they made errors. They've also clarified if you go back and try to change the subsidy amount, let's say, or claim the subsidy or change the subsidy amount in the previous payroll submission, you can't do that either. It'll be tracked and it'll be verified and checked in relation to it. So it's just, I suppose, they're trying to stop people working the system, which is some cases a bit unfair, because the guidance was very sparse towards March, so it is unfair in that respect. So I think there is an argument, well, if you applied it and you applied it wrong, you resulted in a reduction of subsidy. How could you argue that the guidance wasn't there at that point in time, so you didn't know that was a reduction in subsidy?
A question in from George linked to the subsidy. Is the subsidy received by the employer taxable, or is that deemed to be a grant?
Well, that's not taxable. Revenue confirmed that's not, the subsidy element is not taxable. Likewise, it's not tax deductible in those cases.
And tell us this, John, and I'm hearing this up and down the country. Have revenue come out definitively and said where a February PAYE return was overlooked or missed? Like I'm hearing multiple stories where it was missed in March with the panic. Some returns were missed. Is there any redemption for those people, John, or is our revenue holding the line? If you didn't file your P30 on time, you're outside the scheme? Yeah,
it seems to be that they're still consistently making that clear that 15th of March, the deadline, it wasn't there, which is a little bit unfair, but that seems to be still the party line there. Hasn't changed. None of the guidance has changed in relation to that.
And do you have any anecdotal evidence, John, of applications, this is the wrong word to use, but applications getting through our revenue literally declining? Everybody who hadn't got their monthly return by the 15th.
I haven't had anything anyway, you know, from anyone that said, well, look, we got through and it was after 15th of March. Maybe they'll be keeping stump anyway. I don't know. But like, it's fairly clear, and I'd say the revenue systems can trigger fairly easily that, you know, if it's after that date, they're just not going to let it out. The computer says no, effectively.
A couple of other questions in here, John. Just what are the changes for payments to creche workers? John, my understanding is that there is a creche worker scheme, which basically the creches are being subsidized under that scheme. Can you talk to, or where should people go look? Like the government.ie COVID supports page on their website has, you know, it pretty much has every detail of everything that's happening. But can you just talk briefly to creches for a minute?
Yeah, so I suppose I haven't looked at the updated guidance. I know it was to come in by the end of last week, and I'm not sure if it did come in. The guidance was still to apply the wage subsidy, because that was the only subsidy scheme that was in place. So the employer shouldn't be paying the full pay, because at this point in time, you know, the Department of Social Welfare hasn't given their guidance as to, you know, what to do or how do you pay that payment revenue. Have said that, well, this is the only thing that's in game at the moment. That the Department of Social Welfare tell you how they're going to adjust it. You know, you have to just use what you have, which is the wage subsidy scheme. So I suppose I haven't necessarily looked at that in the last couple of days. So, you know, sorry from that perspective.
There's a question in here from Avril. Avril, you've got a great second name. So Avril has a question, just to clarify, that amendments will not be taken into account, so that the payroll will not match revenue records if we did an amendment. I presume Avril is looping back to the point in the conversation a couple of minutes ago, John, where somebody did a P30, but now, you know, they were looking back and the payroll didn't match the P30. Like, they can't, like, what's the impact of going back and changing previously submitted payrolls?
Well, they've said that, you know, it's not permitted and it'll be verified. So I suppose if it was a legitimate error, just like anything, there is an ability to, you know, change it for that legitimate error, but you would have to have some sort of basis in relation to it.
Okay. There's another question in here from John. Okay, can a farming company avail of the wage subsidy where it wouldn't have income for the next 3 months and normally wouldn't, but would have a small amount of income? So with a lot of farmers, the income comes in the second half of the year. This is really a question, John, about the eligibility for a 25% decline in turnover, isn't it? If the farmer can justify that they believe there's going to be a 25% reduction in turnover based on their projections over whatever period they pick, well, then they can claim the scheme. What's your thoughts on it?
Yeah, I suppose, yeah, technically, you know, if you look at it, Q1 versus Q2, you could also claim it. In that case, obviously, if you look at Q2 versus Q2 last year, it wouldn't show you that you could claim it. So you have to see, would you be able to claim it in those cases based on those thresholds as to what you're looking at in those cases.
Okay, so it's like farmers have to look at, there's issues with beef prices. I was talking to somebody yesterday. You know, there's multiple issues, and no matter what type of farming you're in, your revenue streams may be impacted. So, John, in answer to your question, if you can justify, like any business, that based on the information available to you right now, well, based on that information available to you right now, if you can meet the criteria, well, then you can avail of the scheme. A final question in here, John, before we move on and let you back to the material you want to cover. So, folks, we said it at the start of this session, we wanted to get the information out to you as quickly as possible. That's why we're going for a 10 of 10. John and the team are preparing a sort of an all-in, up-to-date webinar, which we're probably going to go with tomorrow. Either tomorrow morning or tomorrow at 2 o'clock. The tech team haven't decided. So we will be back here with more questions and answers. We will be back here tomorrow with more detail for you. A question in from Siobhan, John. Does an employer need to refund the overpayment now, or should they wait until the 4th of May?
They have now, in this FAQ, they've given the the refund details. They've actually in the FAQ towards the end they're giving it, this is how you refund it, and this is the money that this is the process, a step-by-step process as to how you refund it. So I suppose there's no benefit in them holding on to it really, because they can't use that money themselves. You know, it is just effectively client funds, segregated money. So, you know, I don't see any benefit holding on to it, you know, because you can't actually use that money. You will have to pay it. They haven't set a set date as to when it has to be paid, but I suppose they're going to, if you don't pay it back, they're going to reduce your subsidy in phase 2. So you don't necessarily have to pay it back now, but if you don't, they're going to take it back from you anyway through a reduction in subsidy in May.
Okay, one last question, John. Johnny is asking, is turnover, and this is a really relevant question for accountants and anybody in a service business looking at the scheme. Is turnover based only on invoices issued, or it should also be on work in progress built up over the 3 months but not invoiced, as the work hasn't been finalized but could be 90% done? And like, John, your advice and guidance is people need to get really clear on the basis of why they are claiming. What does that sound like to you, John? An initial reaction?
Well,
we're not necessarily raising the bills because we can't get the jobs finished, but we're now building up in work in progress, which will be billed as soon as we come out of the lockdown.
Yeah, so you have to be careful there. Like if you think about even revenue recognition, section 23, section 17 of FRS 105, FRS 102, reflectively, what you do, you recognize as in that case as the work is performed. So, you know, technically, I suppose the correct answer there would be that if the work is done and it's probable it's going to be payable, well, then you would recognize it as accrued income in your own accounts if you think about it logically. So in that case, applying the strict rules, it wouldn't apply if you accrued for that income and there wasn't a 25% deduction. Assuming that, you know, now at this point in time, you believe, know that it won't be 25, but if at the time you're going in, you believe, well, all the work I do and it is going to be less than 25%, well, then you could claim it. So it depends on the circumstances. So if your accrued income was there, technically, if you were thinking about if you were doing the accounts, what would you do that for a normal client? You would be accruing the income in those cases in that quarter. That's the technical.
I suppose the 25%, if we stick with accountants. So Johnny, if we stick with accountants, the 25%, what you're looking at is you're looking at your ability to do work during the period. So can you output at the same level as you would during the period? I think you're also then looking at your client's ability to pay you during the period and their client's ability to pay you for the work that you've done. And I think the third parameter that accountants need to look at and consider is they need to look at their overall client base and need to do a very realistic assessment of who's still going to be standing at the end of this. So say, for example, Johnny, if you had, I know, 40% of your client base were pubs and restaurants, well, that becomes a very easy, well, okay, our income is down because our client base is down. But I think you need to look across multiple parameters to decide whether you can claim or not.
And I think a lot of what you just mentioned is, if you think about the revenue recognition criteria, if you're doing the work, well, it's nice to do the work and put your hours in and put in bill time, but is it recoverable is the other side of the equation, as you're kind of saying in a different way.
Yeah, so the fact, Johnny, that you're putting it into work in progress is one thing, but realizing a bill and realizing the collection at the end is another thing. So we look at reduced work capacity because of remote working. We look at reduced work capacity because lack of work coming in. We look at reduced work capacity because our clients aren't as busy. Then we look at failing businesses. We look at actual bills raised, actual cash collected, actual work in progress. You build a bigger picture. You build a bigger picture. And just folks, and obviously we've got to get the balance right here. This is a terrible time for everybody, but looking at the opportunity, we're hearing back from some of our Profit Pro members that they actually have more cash in the bank now than they normally would have. And that in some instances, while there's huge amounts of uncertainty out there, they're winning new business, they're winning new clients, they're building better relationships with existing clients. So it's a realistic question, Johnny, because some firms, they're not experiencing the 25% drop off. They're actually growing during this period. John, any final comments on frequently asked questions before we go on to talk briefly about the minister's announcement yesterday?
Yeah, so I suppose there's a few more that we haven't dealt with. So just FAQ 3.1 is updated. So it's effectively now it confirms that employees are going to get their insurable weeks while they're on subsidy, and it's the insurable weeks or the stamps that they're going to get is based on their normal employment status. So what were the status? What was their employee or PRSI status before going into this scheme? They'll continue to get those stamps for those, which is again welcome. FAQ 3.13 confirmed an employee who resides overseas. So up to now, it's just the FAQs that said in Northern Ireland as the start of it. So where the employee who resides overseas and is eligible for the subsidy if the scheme conditions are satisfied and it's an Irish contract of employment in those cases. FAQ 3.4 then, what 3.14 just confirms that an employee who has a POI exclusion order and appears on the payroll submission during the period January and February are eligible employees. If they're not on the payroll submission at any point in time, they're not eligible employees in those cases. FAQ 4.2 then is updated to confirm that even though classes J9 is applied and assuming the subsidy is properly applied, then the normal contributions are deemed to be paid. So it's re-clarification of what they've already stated in an earlier question.
Real quick one, John, when you touch on this, if we've claimed the COVID subsidy, right? So we've claimed the 350, the short-term layoff. Do those people have to be terminated and get a P45, or what's the approach there?
Well, I suppose technically, you know, the Department of Social Welfare should technically be seeing something to say that they have ceased working, but they're not doing that at this point in time. I suppose the key thing, if you have him still on not necessarily paying him on the payroll, but he's still there, is that you don't pay him at least, so that at least he hasn't got a wage subsidy in that case. So if it is looked at, well, okay, I didn't take him off the payroll, but he still had no wage subsidy, so this is why he's getting it.
Yeah, you see, we're hearing queries from around the country where that question's coming from, John, is where people haven't issued P45s, that in some instances the employees are being declined the scheme when they go apply for it. The Revenue are saying, well, our Department of Social Protection are saying, well, we need a P45, either you're being paid or not. Whereas my understanding was that if people were being short-term laid off, just arising out of this, did you keep them on the payroll by paying them a cent, just literally to keep the payroll open?
Well, yeah, well, I wouldn't be paying them anything, but technically I think the Department of Social Welfare would normally have looked for proof that they had ceased if they were doing any other things. So I suppose the Department of Social Welfare are technically within their rights to ask for that. I know a lot of times it's not being asked for. So, you know, okay, they are being left on the payroll, but make sure if they're left on the payroll that they're not getting any payment at all.
So leave them on the payroll, don't pay them anything, and basically if the Department of Social Protection, if a particular office is having difficulties here, for the employer to send a letter saying they've not been laid off, this is what we've availed of, this is the revenue guidance. But I suppose
the revenue having guidance in relation to that, the revenue just will say, well, it's you know, they said, well, they believe that, you know, the Department of Social Welfare want you to be ceased in order for them to be able to pay a pandemic payment.
Yeah, you see, and the whole problem here, John, is employment rights. The real problem here is employment rights. And if somebody is P45'd, well, does that effectively terminate their employment rights? Are we now into redundancy situations? And that's why our position is and has been, well, you put them on the COVID scheme, but you keep them on the payroll.
Yeah. So just going on then, the FAQ 4.3, so this deals with the calculation of the average net weekly pay for purposes of subsidy. It's just confirming, as to what I said before, it confirms that bonuses, commissions, and any other payments are taken into account in calculating the average net weekly pay for January and February. Also, they're just dealing with, in this particular case, if there's an employee, let's say, who was on the payroll, but they're exempt from PRSI, maybe because they have an exclusion order or some other reason, well, then when you're calculating the net weekly average pay, you use the divisor of 9 here, regardless of the fact that they might have been paid for less periods in those cases. FAQ 4.6 then is just clarifying out the employee per employee didn't receive their usual January and February pay, maybe because they're on illness benefit. In those cases, they're just saying, well, look, you have to apply the rules of the C scheme. If you don't want to apply the rules of the subsidy scheme, well, then, you know, they're either laid off to go to on the pandemic, or you don't apply the subsidy scheme and call and you pay them their normal pay and not get any J9s in relation to them.
Okay, so John, I think you've answered this question, but I just want to recap on it. It's a question in here from Margaret, and she's talking about monthly salaries submitted for January and February, 4 weeks PRSI each. And she's asking the question, should I calculate the average wage over 8 or 9 weeks?
It's on how many weeks, insurable weeks were in it. So 9 is the divisor. If it was 10 in that example, well, it would stay at 9. In that example, you're saying there is only 8 weeks insurable weeks, so it's divided by 8 in that particular case.
Okay.
FAQ 4.10 just confirms that the employer can apply the wage subsidy, can't apply it retrospectively, so you can't go and change what you've already submitted effectively. As I said, you know, the verification checks going to be done in relation to that. You know, if you have a genuine error, you know, I suppose, you know, you might talk to revenue in relation, but the party line is, you know, you can't go change them with the idea that they're afraid people will try to work the scheme now and try and get subsidy back when effective. They never applied for it. And then FAQ 6.1 is a new FAQ just dealing with the fact that, you know, if you're making a payment, a refund of maybe the overpayments to revenue, it tells you the bank account and how you go step by step process and how you tell them this is a refund for the wage subsidy scheme in those cases. So that kind of summarizes the changes to the FAQs. I suppose then the other change was in relation to the ministerial announcement that was issued. So can you see that on the screen?
Yeah.
There?
Oh, we can see that clear as well on the screen.
Yeah. So effectively, this, I suppose, the caveat. This is our interpretation of the press release issued by the government there yesterday in relation to this new scheme, which applies for payment dates on or after the 4th of January and a payroll submission on that day. Sorry, 4th of May, and a payroll submission made after that date. So effectively what it does.
Here, folks, depending on where you're watching this video. So this video was recorded, this session was recorded on the 16th of April at 10:37 in the morning. This is really based on the ministerial speech. There's not guidance from revenue, there's not anything. April operates based on the subsidy scheme as published in Ireland. These changes don't kick in until May payroll, which is this first week of May. So John, yeah. What? This is an attempt, John, to iron out some of the anomalies that we have been raising since we first saw the draft legislation.
Yeah, no, that's it. And I suppose, you know, while it's not coming until the 4th of May, it is good to be advising clients, well, at least you might be getting a break, or if you're thinking about laying somebody off, this is coming in at this point in time, so they have it in their framework. So, you know, the way things are worded in that press release, I think it's just the way they're mixing gross pay with net pay in the way it's worded. It's just a little bit confusing. So I suppose really now where you're, in our example here, where you're less than or equal to 412 average net pay for January and February is less than or equal to 412 pay. The subsidy amount is now 85%. It's moved from 85%, from 70% up to 85% in those particular cases. So that effectively, that if someone is on 412 average net pay, they're now going to get a subsidy of 350. So the very same as the pandemic in that particular case. So there's not as much difference in those cases. So in this example, this person we calculated the average net weekly pay as we saw here in one above. It was 412. 85% was 350. So if we want to make a top up, the max top up that can be made before reducing the subsidy of 350 is €62, which will be liable to, you know, same as before, USC, income tax, and employer PRSI, that amount.
John, to be fair, that's a significant equalizing move, isn't it? That's going to make a huge difference for the anomalies where people were in the work, on the front line, people were at home, and there was basically very little difference in terms of how they were paid. This is a big positive move, John. Yeah,
and they've also said for someone that's less than or equal to 412, if the employer wants to make a payment up to 350, it's not going to reduce the subsidy amount either. So I suppose the next calculation will illustrate that. So here we've assumed we've done our calculation, 390 is average net pay. We get our 85% of that as 332. That's the subsidy amount that we can get. Obviously, you can pay another 58 without any without any reduction in the subsidy if the employer wants to. But let's say that 58 wouldn't apply in this case, but let's say that 58 needed to be 70 in order to ensure that this employee got 350 into their hands. Well, then the revenue said in that particular case, just because you've regrossed it above the 58 euro, it won't reduce the subsidy. So the idea is they're hoping the employer will bring them up to 350 here because it's not a huge cost for them, and they won't.
This is looking at part-time workers. This is looking at people who aren't working full weeks, and this is basically giving employers an opportunity to keep everybody as well off as they can.
Yeah, and I suppose it could be that somebody's that's part-time workers that might be working a little bit more this time, so that they are getting more paid. They can be paid it, and it won't impact the subsidy for the employer in those cases either.
Excellent.
So 412 then, sorry, there's another example, 260 average net pay, 85% to 221 again. So you can make an additional top up of 39 euro. But in this particular case, revenue set in those less than or equal to 412, as we said before. You can pay an additional amount, the employer can pay additional amount, bring the 221 up to 350 in the hands of the employer without reducing that subsidy to 221. So they'd still get the 221 subsidy, and they could pay 350 in those cases. So maybe
they get the 221 subsidy. You pay under the basic calculation, you pay 39, but the reality here is that the employer can top up to 129 to give everybody a 350 take home if they want.
Yeah, and I suppose why would you do that? Keep the employees, or potentially maybe do some more hours in the week this week compared to what they did, the previous week. So it makes, whereas before, if you had someone who was doing more hours, it'd reduce your subsidy. Whereas now this isn't reducing the subsidy in those cases. So then the next category then is the 412 and 500. So they are still at the 70% category here. So they haven't changed. Again, same as before. So this 70% of the average net weekly pay is 322. So you can do a top-up payment of 138 in this particular case. The 350 rule, bringing it up to 350 in this case doesn't apply for these type of employees. I suppose the rationale is that they've more income themselves, because the 412 is technically around 24,400 gross. So if you're up above that, between 24,400 and around 31,000, well, then I suppose the rationale is, well, you've got a little bit more money anyway. So, you're not going to get the reduction in the subsidy, the non-reduction in the subsidy for bringing this person up from 322 to 350 in that case. So the next one then is obviously greater than 500, less than 586. So this hasn't changed from the previous time. It's maxed out at, and I suppose this one here is maxed out at 350. Sorry, the 412 to 500, the max they can ever get, which theoretically will be the case anyway, because 70% of 500 is 350. The 500 and 586 is the very same as it was, up to maximum 410. So there's no changes there. Again, as before, you actually can pay without the subsidy being reduced as 176. And if you go and put in an additional top-up payment of, let's say, equal to 586, you won't get any subsidy on it before POI, PRSI, and for employer and employee. Just this is illustrating the same point again as before. So less than or equal to the 500, same idea, 70% top up. So the 586, greater than 586 but less than 960, that has changed now. Again, this is our interpretation of what's been issued, which is a sparse statement on the scheme. So this now is looking at, well, look, we're going to give you the max subsidy before this, or in April, as we know it, before the 4th of May 2020, that you're going to get in these categories was 350. That was the max you're going to get. Here, the max you're going to get is tapered based on the reduction in the pay that you've got in the period. So what you get in your take-home pay is, so it will determine what your max amount you can get here in a subsidy. So it's about applying this practically here. So we've calculated January, February average net pay is 770. Again, 70% threshold is the amount, but that's never going to be applicable here, because the maximum in these cases is 350. So then we're saying, well, look, what amount is the employer going to pay here? And I suppose this is a test. Well, what am I going to pay the employer? Ignoring any subsidy and ignoring anything else. Well, the amount I'm going to pay, I'm going to assume is 420 here. So percentage-wise, then that means that 420, which is now what I'm going to pay the employee, over the 770 means that our employer contributions to percent of the average net weekly pay now is 55%. As that is below the 60% threshold under these rules, well, then the max subsidy for that employee is 350 euro. So for this particular person here, you can see, and I suppose it's important, as before, you can't get more than your maximum weekly pay. So in this particular case, if we pay the subsidy 350, and we also paid the 420, the amount that they would get in their pocket would still be, well, the amount they would not necessarily get in their pocket, the amount that would be accessible that they would got paid is 770. So same rules before in that particular case. So the amount is coming into the employee's hand is 770, and the actual cost to the employer is the 420. But you have to see, well, it's working in numbers here effectively, like what am I going to pay the employee myself? And it works out, depends, well, based on that, will you get any subsidy or not? If you get a subsidy, well, then it'll increase the pay in those particular cases. So I suppose applying just going on a further step here, it's just showing different calculations again. In this particular case, we are below the 60% threshold here. But so the max amount that we can get is 350. But again, we can't get more than our net average weekly pay for January and February. So if we took the 350 and the 455, which we assume we're going to pay, the employer is going to pay their top up element, that would be 805 euros. So obviously that's not what the government wants. They're saying in that particular case, actually your subsidy is going to be reduced by the 805 minus the 770 being the average net rate weekly pay. So your subsidy here is capped at 315. So again, and that employee is going to get the 770 into their hand, and the cost to the employer is going to be the 455.
So John, in that situation, the employee is getting 770. That's their weekly take home, okay?
But that might not be into their pocket because you have to apply taxes before, on the top up amount.
So now they get 350 of the subsidy on the assumed top up of 455.
Well, 315, sorry. So like the max top up, if you wanted to keep this right and get the max top up, you'd be better off, and you see in my highlighted area there, giving them 420. So if you change this to 420, that'll go up to 350 and the employee will still get the same 770 net weekly pay.
Yeah, and that's my point. That's my point. People, so it's obviously, this is not, oh, I'm going to avoid tax. This is not any great scheme to avoid tax or reduce tax. The whole country is going to pay for this for a long time. But in that situation, the employer paying the 455, the subsidy is reduced to 315. If the subsidy was reduced to the 410, well, then the subsidy goes to 350. So it's just to watch when you're advising employers, and based on this proposed system, that the level of top up here has an impact on the subsidy amount. Yeah.
So I suppose it's just taking a step for this particular case. So there's a different rule if your employer contribution is spent on average net weekly pay is between 60 and 80%. So again, we're looking and saying, well, look, this is our average net weekly pay that we calculate in January, February. I am conscious of time here as well, Dave, so we're well over. So I'll go as quick as I can go through these.
Yeah, so we're well over, John, but there's huge value in what you're sharing this morning, and I know that, and we're going to be covering some of the same stuff tomorrow. But watch out for the webinar tomorrow, because this is giving excellent insights, John. So keep going.
So in this particular case, we're going to assume, well, the employer is going to top up 550. So, okay, we have a 70%, over 60%, now we're between 60 and 80. So in this particular case, the max subsidy we can get is 205. However, in this case, again, we have to look and see, can we get the 205 max subsidy? Remember, we're maxed out with 205. So in this case, the difference between the average net subsidy and what we're paying, the employer is saying they're going to pay themselves physically without a subsidy is 220. But actually, we can't get 220 with a subsidy. We can only get a max of 205. So in that particular case, the default here is the max amount of 205. So in this case, then the employee is again not getting more than any of their net weekly pay. If they do, the subsidy will reduce. And then obviously the cost of the employer is the 550 into their hand because it's going to get subsidy back from the other employer. So this is just applying the example again, same idea, but it's just in this particular case there's a reduction, because in this particular case, the 770 is the average net pay. We're saying the employer is going to do the top up, taking it up 600 euro. So because if we were to take the 205 and the 600, obviously that would bring us to 805. 805 is over our average net weekly pay of 770. So the difference between them, hey, it reduced the 205 to 170. So as you say, it's working numbers. 565 is the magic number here to a certain extent. So then you get your max subsidy in those cases. So then the other category is where you're over 80%. If you're over 80% in those in those particular cases, well, then you actually get no subsidy at all. So I suppose it's based on the pain that you've had to a certain extent. Then, so you haven't had much pain there, they're saying, so you don't deserve anything in those cases. So there's no subsidy. The next threshold then is effectively, you know, where you're over 960. So if you're over 960 under the current rules for April, let's say, we're saying in those cases, well, you're not into it, hard luck, don't care whether you got a bonus in January, February, you know, the rules are the rules, and that's just a matter of fact. They have started, they relaxed this in these cases, where they say, okay, if you're still on 960 at this point in time, I go get 960, well, then there is no subsidy for you. You know, it's either you pay them whatever you pay them and you apply the normal POI, PRSI, you don't get any subsidy back from the revenue. But they have said where the actual average net weekly pay is reduced in the current period that's been paid below the 960, well, then they will look at the tapering that we just looked at in the previous example. So, but it is important here that I suppose they haven't said what sort of proof is required here for the average net weekly pay that's been paid in this particular period. And again, this here, there's not great, the bulletin or the bulletin issued by the minister didn't give great amount of detail. So again, this is my interpretation of what has been given out. So here we're assuming here in this particular case that the average net pay was greater than 960 when we calculate for January and February, but actually when we go and we look at now, actually this person is going to get paid below 960, and the total amount of the payment to be made by the employer is going to be up to 60% of the average net weekly pay. So you've had effectively a 40% wage reduction or more in those particular cases. So I'm taking that, well, look, the average net weekly pay when we calculate January and February was 1,000. The current net weekly pay, if we apply the rules for the average net weekly pay for determining the subsidy, is, you know, what you're paying now, take off the POI. So that's a theoretical thing that you would have to calculate, which is 590. So as that's 59% of the 1,000, well, then we're into a pay reduction of over 40%. So as a result, the max threshold subsidy that we can get there is 350. So in this particular case, if we apply the numbers, you know, if the idea here is you can't pay more than 960 euro. If this employee gets paid average net weekly pay of 960 euro, well, then there's no subsidy payable in that case. So
but the big difference here, John, and I know the statement is not massively clear, so this is just your interpretation as of today in absence of guidance or legislation. But the big thing here, John, is that previously anybody who was paid over 960 was just out of the scheme. This now gives an opportunity for employees over that level to share the burden with their employer, because if we drop them below the 960, claim the subsidy, it's reaching out to those higher paid team members who are the most valuable, that are the biggest asset but the biggest burden. So this is going to open up a significant cost saving for some businesses, John.
Yeah, no, it will indeed. And I suppose it is, you know, looking at seeing, you know, the numbers, seeing where are you, what is the percentages that you're going to give them? Because if, again, we'll see if it's 80%, they're not going to get any same rules as we had there in the 586 and 960. So in this case, if you look at what our average net weekly pay was 1,000, and we look at what we're going to get now, the net weekly pay, it's 590. Well, looking at this, then technically, if you were to look at that call, you'd say, geez, I'd be entitled to 410 here so that I could still get, you know, me pay. But the max here is 350, so you can't go above the 350 in that particular case. So here you can see that the pay here is 940. So as the pay to the employee is 940, as is not above the 965, well then in the 960, sorry, well then, you know, the subsidy applies. So if that was going above 960, you would be tapered, the subsidy would be tapered down to zero in those cases. So
that's let's be honest, John, and let's be honest here. So there's lots of changes here, but this over 960, not eligible for April payroll, but this is one that's going to get accountants back on their calculators again, advising clients. It's going to get clients back on the phone, and there's calculations to be done here to work this out, to get really, really clear on what May looks like. Now, some people are still obviously dealing with April issues and still dealing with questions. I've said this to my Profit Pro group members, and I'm saying this to all of you now. You need to be careful, okay? So we had the first wave and the first rush of the crisis, and everybody was scrambling, okay? Now, technically last week, the questions should have been abating a little bit, and accountants need to get back to focusing on their own business. What I'm hearing from some accountants around the country is that people are still just, they're still just sort of serving the clients and helping the clients. We need to get focused here. We need to get focused on the bread and butter. We need to focus on your business and getting your business moving. Yes, help your clients. But I can see, John, that this is going to, this over 960 calculation is going to trigger a whole series of new calculations, and accountants are going to need to be ready to advise their clients towards the end of this month. Like even people, John, making decisions about April payroll. People could have been making decisions about April payroll, and this is going to change their approach for the April payroll, isn't it?
Yeah, and I suppose the advantage, the good thing, I suppose, is that if you had laid someone off, you can bring them back on. There's nothing to stop you from that because of this change, I suppose.
Yeah. So for example, so to retain employees, here's a question in from Patricia. And to retain employees, should an employer get employees to come off the pandemic payment and claim the new scheme in May? For lower paid employees, John, that's going to be a possibility, isn't it?
Yeah, no, that's it. Yeah, absolutely. Like, and some of these, depending on what the reduction would be, if they can pay these higher earners, some of them could decide, well, I'll come on as well if they were previously laid off. But for lower paying employees, it won't make difference. Like before, you were better off in the pandemic, but a lot of the case now you might not be any better off. It'd be the same.
Okay.
So effectively, just the next example just deals with, well, look, I maxed out with 960 here, so I've got a restriction on. Although I have 205, so we're between 60 and 80%. I'm restricted here because I can't pay more than 960. So as a result, my subsidy is reduced. So same idea as the second category, 586 to 960.
Okay, John. We're just now, John. Technically, that was a 10 of 10. Now it's the longest 10 of 10 I've ever been part of because it definitely wasn't 10 minutes. But technically, it was 10 questions. John, thank you very much for that. Michal and Jonathan and the marketing team are going to get out details for a webinar where we're going to go back through this. For those of you who've seen it today, a revision, but as always, we'll be adding more interpretation over the next 24 hours. So we're going to get something out in terms of a webinar for Friday on this and the revised calculations. Obviously, to remind you, Knowledge Hub, we have our COVID resource in Knowledge Hub. So anybody who wants to access our full COVID resource, you can get access to everything we've produced over the last 3-4 weeks, which is a huge amount of material in our COVID resource and Knowledge Hub, or some of you who are already here in our Facebook group. And the Facebook group is where people interact. Just before I went live, I did see a couple of questions in the Facebook group. The first one was from Padraig, and he was basically asking for permission to ask questions that weren't necessarily specifically COVID legislation related. Our Profit Pro Accountants for Growth group, it is about you asking questions of us and your peers in relation to anything to do with sustaining, growing your business through this time. So ask questions in the Facebook group. Many of you are members of Knowledge Hub, so obviously you have our premium service in Knowledge Hub. Watch out, we're coming, our financial reporting conference and our complete audit workshop. Colin, Mike, myself, Marion are working round the clock at the moment, developing the material for a financial reporting conference and for a complete audit workshop. Both of those are going to be kicked off and are going to be going on sale from next week. Now, we do have our spring tax this afternoon. Okay, so everybody is COVID focused, but obviously we've got to deal with the bread and butter. So we've got spring tax essentials is live this afternoon at 2 o'clock. If you haven't got a seat on that, Jonathan and Michal will put a link into the chat wherever you're watching, and you can still get onto that. Conference. So lots of things happening. Stay here. Coronavirus, the new normal as it settles in, the new way of how we're doing business. John, his team, and the entire OmniPro team will continue to be here to serve you. Thank you for joining us today. And until I see you again, stay safe and let's get it done.